Hi everyone, welcome to Market This Week. Week ended 1st of December 2017, and what a week it was. Sell-off finally, and quite a sharp one, especially on Friday. Quickly, firstly, apologies that I could not upload last week's Market This Week. I had to take a call between a paracetamol to take care of my fever and recording this video late night. So I went with health. Got myself fixed now, and however, the Nifty and the overall markets don't seem to be in a well fix at the current stage. Sharp sell off on Thursday, that's what we notice towards the last hour on Thursday because of derivatives expiry. But it was Friday's trade which was quite a disappointment because it sold off quite sharply. Let's start first from the monthly chart. If you recall, when I started this Market This Week videos, I used to say that the early signs of a market top out, which are there in the monthly charts, and I don't have a confirmation yet. If you recall those videos, well, I have a confirmation now, and the levels that come out is close to the lows of October 2017, which is close to that 98.30. So on a round figure level, we can talk about 9800, 98.30 levels on the downside, uh, which needs to be breached. And if 98.30 or 9800 is taken care of, then you can expect 98, that's 200, and add another 500, 700 points correction for the Nifty. From 9800, that's close to 9000, 9100. Too early days for such a long haul target on the downside. So essentially, if it comes to around 9100, we're looking at the erstwhile breakout point, which was the March 2015 highs. Is it possible? Yes, it's possible. We should not discount that. But at the current stage, the retest of 98.30, 98.50 is definitely something that one should keep a close watch on. So we're looking at a level close to that 150, 120, 200, 300, 350 points on the downside for the Nifty spot. From a short-term point of view, it's been two long candles, range expansion back to its previous lows. Indicators are weak. Couple of the short-term indicators have gone deep, oversold, and we can see a bit of support, solace coming in from this level, which is close to 10,100. We've got erstwhile highs, we've got earlier supports. So this zone should definitely hold this two-day sell-off for sure. It can lead to a bounce back, but the million-dollar question would be if the bounce back comes, which level it should take out. So let's drill down to shorter time frames and look at the hourly chart of Nifty spot. And over here we see that this is the Thursday Friday's one-way sell-off. So any short-term bounce back and 10,200 and little above that, close to that 10,220 is a bare minimum that the index has to take out. On a slightly higher note, I see 10,250, 265. So there are multiple resistances on the upside. So let's wait for the bounce back, keeping in mind that we have 2 days of back-to-back expansion on the daily ranges. I sense that Monday, Tuesday probably will be dry days where range contraction is very much likely and the index will stay within a range. Let's look at the sectoral indices which panned out, and one thing that definitely stands out is the real estate, which was actually positive last week. All the other sectoral indices posted a negative close, topped by the PSU banks, down 6%, metals down close to that 4%, and energy little over that 3% mark. But attention comes from real estate, and the real estate index, though down on Friday, but for the week it was kind of positive. Gave up quite a bit from the week's high and kind of made a gravestone doji or a shooting star kind of a pattern under Japanese candlestick analysis. But nevertheless, it was a weekly positive close. Let's look at the sectoral constituents. The daily charts would be a good one to check. Delta Corp, something I don't track that often, but yes, trend seems to be all right. I've got a nice, contraction in the MACD indicator above the zero line, which is clearly shown by the improvement in the MACD histogram indicator. But I'll wait for the breakout. The breakout comes about the 272 Possible candidate, not the best of picks within my radar. DLF, yes, is something I would like to trade, but I've got clear signs of divergences at this setup, and I think that thanks to this bearish engulfing pattern, thanks to this pinch, if DLF breaks Friday's low, which is 221, there are chances that the stock is likely to inch further on the downside. Godrej Properties holding really well, very good uptrend. This is the kind of stock that you would like to buy and hold in your portfolio. At the current juncture, too many dojis, too many spinning tops, kind of wait and watch is a better scenario. HDL and Unitech within this space is something I stay away from. India Bulls Real Estate, a stock that I have in my personal portfolio for a very long time, has gone completely range bound. If I look at the weekly charts, this range bound movement is very much clear. Upside capped by around 240, downside very strong supports, psychological 200. MACD deteriorating, though I've seen some amount of improvement coming up from the momentum indicator, which is the MACD histogram. My indicators over here suggest the fact that we have a contraction, which is very much clear from the size of the candles over here. So kind of make or break. It's been holding really well, the supports. So 240 breakout, very important for India Bulls Real Estate. Keep a close watch on that. Over Real Estate, Realty would be my best pick, and it has been my best pick within the real estate stocks. Beautiful chart within this list of stocks, and something that you would definitely keep a watch for to buy on a dip. MACD divergence, very, very clear, distinct. We have a short-term correction in our hands. Wait for lower levels to come in where you can look to accumulate. 450 and a little below, tad below that, 435, 450 zone, really good one where you can add Oberoi Realty in your portfolio. Phoenix, I don't track that well. Prestige seems to be in a nice uptrend. This is the daily and the weekly charts. The monthly charts also suggest the fact that we have a strong trend in our hands. Doji, definitely sign of ease off uncertainty on our daily charts. Stretched are the indicators, the momentum ones as well as volatility. So high chances this guy will ease off. No sign of topping out right now. So I sense that it will buy time and stay within this range and not correct too much. Lastly, Shobha. Yes, it's been on a run thanks to this breakout, but again, one stock that I don't recommend to trade that much. Unitech, forget it, there's no point looking at it. Let's look at Bank Nifty. That is one index which actually the PSU banks which track the market sharply. The daily chart of Bank Nifty takes the index back to its previous lows, and just like the Nifty, this is the zone that one should keep a very close watch on. Erstwhile highs, resistance, broken, supports, confirmed once. Now will it hold this time? Keeping in mind the fact that we have an expansion, add to that fact that we have momentum supporting the sell-off, add to the fact that the short-term indicators have gone deep oversold, I sense that it will buy some time. Bias is still negative, but supports are really, really strong. If I quickly check, yes, there is a rising gap over here, and the index has just tested this rising gap. Fill out this rising gap, and we have another support coming in from a very wide gap on the lower side, which is close to that 24,500. Not much stock on my radar right now. I would buy some time for the first couple of days this week. But yes, a few odd stocks. I'm keeping a very close watch on Piramal Enterprise. Look at the weekly and the monthly chart. Strong uptrend, consolidation. Breakout candidate in our charts closes, takes out the 2850 mark on the upside. Yes, stock is likely to give you a breakout. I'm keeping a very close watch on the cement space, ACC and Ambuja to be very specific. I sense that the stock is doing really hard to bottom out over here and give a bounce back. No confirmation yet, so I'll wait out. Amongst the large cap, Reliance Industries, sell-off was quite sharp on Thursday and Friday. Indicators oversold. Momentum, however, is supporting it. So I sense that the stock can drag further down towards sub 900 levels, and that is the zone where if I see some bottoming out pattern shaping up, that's where I can look to trade the pullback. And within the banking, I'm keeping a close watch on ICICI Bank as well. None of these charts have given me any confirmed structure to buy into, but definitely on my radar, keeping in mind that most of these charts are in a strong uptrend, sharp sell-off, opportunity to buy into the pullbacks. So I'll play defensive Monday, Tuesday probably. I'll wait for the market to slow down. The selling should ease off. That's my first sign. Once the range contracts, I will be looking for those stocks which have hit their strong supports, where the indicators are deeply oversold. I would love to see some divergences shaping up, and if that happens, those are my pullback counters. However, if the market fails to do so, and if we get any bounce back and it does not sustain, then going forward from December onwards, we would start looking at shorts. So far, we've not been looking at shorts mainly because of the strong uptrend that we had. But keeping in mind the kind of sell-off that we saw recently, I think selling into the market would something one should start to look into if the rallies don't sustain. That's it, guys. Thank you for hearing me out. Keep those suggestions coming in like always. And yes, market this week makes a comeback. Thank you, and trade well, trade wise.